I'm not sure if you can see how shiny my forehead is right now. It's pretty shiny. My whole face is actually a little shiny, little sweatiness, if you will. Remember the other day, like at least I don't know, 2 months ago, I started doing a video, realized the mute thing on my program was on, and everything I said never got caught on audio, so I had to start it completely over. I just spent 20 minutes. Uh, Listen, I just did 3 videos. I just did 3 separate videos, and the effing mute thing was on the microphone. And I thought maybe it was just this last video. No. Check the last one before that. Can't hear nothing. The first one, can't hear nothing. Oh my God. Oh my God. Please help me. That's about an hour. 20-minute videos roughly each. 18, 20 minutes. Oh, that's painful. Oh, that's painful. But I gotta do it. Gotta do it. Because now I'm angry. And I can't just let those videos go to the recycle bin of nothing. I gotta do it over. And it hurts. Okay? Can I just say that? It hurts. It's painful. Oh my God. So I'll get on with it. There was an article from The Sovereign Man, Simon Black, and he recently came out and said something like, physical demand has dried up. And I thought, well, from what I understand, what I'm looking at, global demand is not drying up at all, but he's looking at certain specific types of metals or types of precious metals, as in coins and bars, retail, this and that, and gives a blanket statement. Oh, it's it's kind of drying up. Nope, my Magic 8 Ball verified 3 times in a row. Not true. But something a little more important, a little more respectful than the Magic 8 Ball is a man named Dave Kranzler, precious metal fund manager. Is demand for physical gold really collapsing? He says, seriously, Simon Black wrote an article titled Demand for Physical is Collapsing. He focused on retail bullion demand numbers. The headline and the content is largely fake news as it focuses on the demand for minted coins versus the paper gold market. We're not really sure about the intent of the article, but the content was devoid of any relevance to the actual global demand for physical gold. While the retail minted coin and smaller size bar demand is down from last year's levels, there's 2 factors to explain this. First is price. The price of gold and silver was lower in early 2016 than it is now. The price of gold in February 2017 averaged $1,230 to $1,240, while the price a year ago in February averaged just $1,175. Retail buyers, so in other words, cheaper gold, people buying. Every time they dropped the price, people would come and flood in. Retail buyers of gold and silver coins are highly sensitive to price and tend to chase the higher price up to a point. On this basis, it's not surprising that more minted coins were sold a year ago compared to this year. This price effect on the demand for retail gold and silver coins likely explains about 25% of the demand comparison between 2016 and now. The second factor is the economy. Remember, the end user of minted bullion products is largely the retail buyer. In the first 2 months of 2017, real wages have declined. Even more negative for retail sales of any sort is the fact that real disposable income has been declining on a year-over-year basis since December 2015. While we at the Shadow of Truth do not consider buying and owning bullion to be discretionary, retail sales, including sales in gold and silver bullion coins, is highly dependent on the relative level of real disposable income. Thus, once again, it should not be surprised, based on just looking at retail demand for physical bullion, that retail bullion sales are falling. On the other hand, the Black article, Mr. Simon Black, purports the idea that retail bullion sales represents global demand for gold and silver. Nothing could be further from the truth. Retail demand at the margin has no effect on price other than maybe the price premiums in the coin market based on mint supply and retail demand. The majority of gold bullion demand comes from the jewelry industry, Eastern Hemisphere central banks, and sophisticated wealthy and institutional investors. India and China alone import more gold than is produced from mines globally. This is why Mr. Black's paper gold price is rising. It's why the Bank for International Settlements and Western central banks have failed to eliminate the significance of gold in the global monetary system. Gold imports into India jumped 175% in February from February 2016 to 96.4 tons. In fact, official gold imports into India have been rising since December. And that does not include door bars or smuggled gold. 179 tons of gold was withdrawn from Shanghai Gold Exchange in February. This is 60% higher than February 2016. The Russian central bank gold reserves have been rising almost monthly since mid-2007. To claim that the global demand for physical gold is collapsing is seated in either ignorance or malintent. But either way, the assertion is outright idiotic when the facts are examined, which we do in today's episode of The Shadow of Truth. In this Silver Doctor's article, I will link to it because there's another link at the bottom that shows the YouTube video where they showed the, I guess, charts and everything else, whatever is in this video. It's 21 minutes and 41 seconds long. So if you want to check that out, it'll be in the description link. So now the other thing, insanity still rules, and that's bullish for gold and silver ultimately. Because when sanity returns, and it will return, it always does. Kind of like, remember the tulip bubble? Insanity existed. And then sanity came back. And of course, people were wiped out. People hawked up their farms and land and all kinds of stuff for a freaking tulip. How stupid could people be, right? Pretty stupid, because I just read, I think I sent it myself to do a video on, which I may do. A guy decided in Canada, I've seen all these signs and radio ads about, get in on the real estate market and flip houses and this and that. And he said, you know what? I'm going to go to this thing. I got to hear this. I got to, we're at the peak of the market. Rates are rising. Like, right now's the right time to do this. Are you kidding me? So he said, I figured I'd go in there for just a laugh. And he was surprised, floored at how many people actually showed up and paid some, at least, he said he was able to find a ticket for $50, but they were charging $150 per person normally, times 15,000 people. And he said, boy, speaking of insanity, there are people out there who are buying all of it up, as in buying up everything they're told. Yeah, the market's great. Let's get in it. Let's do this. No alarm bells going off at all. Everything's fine. So speaking of insanity, it's what this guy's talking about. Another Silver Doctor's article. We have been down this road before, but people either do not get it, do not care, or are so woefully ignorant beyond salvation. But we've been down this road before. If that's over now. My subscribers keep coming back for more. Whenever I saw that line, I couldn't resist that. I had to go there. The emergence of an unexpected Brexit victory, followed by which by the way, end of this month, it's going down. Article 50, it's a done deal. Followed by an even more unlikely event, a Trump presidential victory, are the outgrowth of the global elites having far exceeded their almost unspoken, unchallenged rule of the world, accomplished mostly by controlling the world's money. Money, one of the most common words in every language, yet the least understood, and by preference and design regarding the money changers, we will address money solely from a U.S. perspective, not out of arrogance, but because money has a lawful definition that has been turned upside down by the likes of Rothschilds and their other banking elites. We have been down this road before, but people either do not get it, do not care, or are so woefully ignorant beyond salvation. There is only one form of money, also true throughout much of the world, but lost in globalization over so many decades, and that form of money is gold and silver. The Coinage Act of 1792 established silver as the monetary money of account in the United States. And while the government and federal courts still refuse to acknowledge it, that law has never been overturned and still applies. At least it is supposed to apply. A U.S. dollar is not a piece of paper, such as what circulates today as fiat Federal Reserve notes. They are not federal. There are no reserves, and they do not even meet the definition of what a note is. Yet, almost everyone around the world accepts this worthless fiat, spending their lives working for it, willing to steal, go to jail, even die for the fiat, all without the slightest idea of the difference between a lawful dollar of silver and a dollar issued by the foreign banking cartel, the Federal Reserve. The U.S. dollar is the gold standard for all silver coins and shall consist of 371 grains and 4/16 part of a grain of pure silver or 416 grams of standard silver. A Federal Reserve note issued by the gangster cartel of foreign bankers is a debt instrument, also called legal tender. In this country, it's debt. Debt is the opposite of money. You can thank the foreign cartel for having passed the Federal Reserve Act in December 1913, in which the bankers finally took control of the money supply of the U.S. and turned the definition of money upside down to the extent few in this country, indeed the world, have a clue what lawful money is. The greatest growth in prosperity in the U.S. occurred in the 1800s when gold and silver were the only form of money. The biggest change began starting in December 1913. And just over a century later, the entire world is awash in debt considered to be money, but is not. For anyone to say there is not enough gold and silver in the world today to support a specie-backed currency is merely espousing banker gibberish. It is all a matter of price. Plus, by using gold and silver backing, the money changers and the governments they control would be too constrained in the paper fiat money they issue without any backing whatsoever. Even with this brief but totally accurate depiction of what money is, people prefer to believe in the lie. That lie being the biggest Ponzi scheme ever. Federal Reserve notes. Debt instruments accepted as real money. But again, it is not real money. Fiction takes precedence over reality. It is no different for the Eurozone, another forced upon the people fictional Ponzi scheme where unelected bureaucrats from Brussels dictate European lives to their detriment. The chart below is a more current depiction, I'll show it in a second, of the value of gold and silver as true money over anything else. Notice the price stability between the arrows at the bottom of the chart between 1865 and 1973 with the question, why? Let's take a look. Let me zoom in for you. The question is why? See these two lines, arrows? Pretty damn stable until we remove gold backing the US dollar. Then look at this, completely unstable. So why? The answer is deceptively simple. During that period of time, oil was priced in gold. In 1973, the banking cartel, through yet another puppet President Nixon, closed the gold window. The financial world has never been the same since. So let's keep looking. The period of time also marked the establishment of the petrodollar as the world's reserve currency, wherein all business transactions had to be settled in fiat Federal Reserve notes, more widely known as and accepted as the dollar to this day. Foreign countries now had to buy treasury bills and bonds as their foreign reserves. Look at how the unsustainable growth has risen. Again, going back from 1955 to 71, completely stable. It's not even on the freaking map. As soon as we detach that backing of gold, US dollar, got the petrodollar, people got to buy, everyone needs to buy treasuries. Look what happens. And even this little inclination from 71 to hell, even 1995 or so right here. Yeah, it's going up. It's clear. But look what happens after 2001. Oh my God. The amount of treasuries out there now. Unbelievable. And again, these are backed by what? US dollars. US dollars. Not gold, not silver, not real assets, paper money. Same paper money that Donald Trump has said numerous times, it's too strong, it's too high. The value of the dollar is too much. Why would a president say such a thing? Unless he intends on taking care of that problem and devaluing it. Because we're going to have a trade war with China. It's going to happen. and other countries will be involved too, and it'll be a race to devalue, 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 devalue. And boy, oh boy, I don't want to see the price of, actually I do. I do want to see the price of silver and gold when that happens. So both charts from an excellent source by Grant Williams, The Death of the Petrodollar. The global banking cartel has been so cunningly deceptive and so well organized to pull off this incredible scam on the world to the extent that most remain in the dark about their being financially stripped by the money changers, all in exchange for worthless paper. Europe has not done any better. According to Eurostat data, 213 billion euros of taxpayer money, equivalent to the GDP of Finland and Luxembourg, or more than 3 years of all military expenditures by Russia, has been permanently lost as a result of the various bailout packages in the EU. Statistics from the EC Directorate General for Competition indicate that more than 1.5 trillion euros was used in different forms of rescue packages between 2008 to 2014. 6 years. In other words, bail out the bankers at the expense of the people. Europeans can point fingers at and criticize President Trump all they want. Every time anyone points a finger at someone, there are still 3 more pointing back at them. What made Brexit and Trump possible is the insanity of the world in which we live. The U.S. has Trump. Europe has Angela Merkel in Brussels. We would like to say that Trump is at war with the deep state in the U.S., but in truth, it is the deep state fighting for their non-Hillary existence and keeping their losing grip over this country, and by extension, Europe, our 51st state of chaos. When elite puppet extreme Barack Obama passed the massively expensive and equally massively failed Obamacare, he falsely stated to the people, if you want to keep your health care, you can keep your health care, or your present health care. What a disaster. With that explanation, perhaps our European readers can appreciate a similar disaster confronting them. If you want your refugees, you can keep your refugees. How has that been working out for Germany and Sweden, amongst a host of other countries losing their national identity and unable to point the finger at their perpetrators? You can keep your Merkels and Brussels non-leaders. What most Europeans fail to realize is that as goofy as Trump may seem to them, he is a breath of fresh air in fighting the fascist state-controlled federal government. All of Europe have their collective heads up their rear ends by allowing the destruction of their own nationality. Whistleblowers like Snowden and Assange have done more to expose the criminal spying by all governments, yet they are treated as criminals for their brave acts, while the CIA and the British government run amok trumpet their criminal spying activities and their theft of national identity and freedom of their citizens with impunity and no fear of government reprisal. It is this never-ending kaleidoscope of insanity by world leaders. Donald Trump, Theresa May, and Putin get a pass, for now, that those who have been buying and holding gold and silver continue to question when will sanity return. For when it does, both gold and silver will likely reach price levels never seen before. Like I said, you have one shot at this. You only have one shot, and it's now. And it has been for the last several years. You've had your chance. Again, sub $20 silver has the words buy me, buy me, buy me written all over it. So there are no clear answers on how the war on gold and silver will work. It will create some havoc, to be sure, but no government's war on blank has yet to work. All we can say is to remain steady in resolve and keep your physical precious metals close and, as importantly, private as you can. Those without will be more than ready to turn in those with, and probably for some kind of traitorous reward, so be careful. The charts for us are the best framework for depicting where price is headed or not headed, as is currently the ongoing situation for precious metals. So, point being, sanity will return, and when it does, you better look out below for precious metals prices. It's the only thing that has history of saving people's wealth. It's the only thing. Even during the tulip bubble, if you had precious metals, it would have saved your wealth. Now, it wouldn't have stopped you from mortgaging your farm or your house to buy a tulip bulb, which is insane. And had you not been involved in that and had some precious metals, I mean, it was money back then anyway, but you were saving them and kept them and didn't do some nonsense like that, Again, you didn't lose any value. Just because the tulip bubble blew up didn't mean all of a sudden gold and silver prices shot down. No. You could have looked at everyone else like a bunch of idiots. What are you guys doing? And believe me, there's an idiot. As I say, there's a sucker born every minute. And Lindsey Williams' last elite friend, Ken Fromm, said, this is a sucker's rally that will ensue for several years. It'll keep going up to absurd levels, and then it'll go up even higher to more absurd levels, to be followed by more absurd levels. And then we're going to pull the rug out. I think we're getting close to that time when they're going to pull the rug out because, boy, people have bought into it. Look, it's been 8 years. It's been 8 years now. I mean, come on. There's everything. It's just going to keep rallying. Have we forgotten it was doing the same news stories now, or we're back then too? Markets break records again. Dow Jones all-time high again. And we've had days and days and days now where the Dow Jones is just looking not too good. Day after day after day, well, markets not looking good. Matter of fact, I haven't even checked today. Dow Jones Industrial Average up or down today? Up. Not that it was a bunch, but nonetheless, it was down 8 points, 8.7 points in the red. Point being, when you have days and days and days and days, one little up and then down, 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 I think we got some problems. We're not even in the September, October time frame yet. The typical crash time frame we've always seen. What if the club wants it to happen a little earlier? We'll all be thrown off. Hey, I thought it was September, October. Then again, maybe not, because that September 23rd date in all those movies, there's something to that. We'll find out one of these days, but not yet. Take care.